if the stock market tanks right before you need the money? That's coming up. Hi everybody, welcome to the video series about bonds. I'm Rick Van Ness. We're a non-profit site to help you be a smart investor and use common sense to build an all-weather portfolio to finance your dreams. So why bother with bonds? The first reason why owning some bonds is always important is because stocks are very risky. If we pay any attention to the news, then we know that they are volatile. A good rule of thumb is that they could lose 50% of their value in any year. That year could be this year or the first year after you retire. So they are risky in the short term and in the long term as well. Over the past 2 centuries, stocks have returned 7% a year above inflation, or a real return twice that of bonds. But doesn't this chart just beg our very question? Why bother with bonds? One important time is when you can be hurt by short-term volatility. The ratio of stocks to bonds is the most important lever you have to control your overall investment risk. Bonds are risky too. Later we'll see that bond values move opposite interest rates, and sometimes they don't keep up with inflation. But keep this in perspective. They are an order of magnitude less volatile than stocks, and we'll learn how these risks can be managed. Now it's time for some fun. It's simple. I'll give you 2 facts. You choose the one that's true. Here's the first one. The longer you own stocks, the safer they become. The second one is, the longer you own bonds, the safer they become. Now it's your turn. Click on the one that's true. If we use volatility to measure safety, then this one's false. Stocks remain volatile every day of every year, including the day before you sell them 40 years from now. This is an easy mistake to make because we often hear that stocks held for decades rarely lose money. That's true too, but not losing the amount you originally invested becomes much less important than not losing the value it grows to become and that you come to rely on. This is correct. These 2 choices get at a major difference. While buying stocks or buying ownership in companies, something that you can keep forever, buying a bond is really just loaning your money for a specific period of time. The longer you own the bond, the closer you get to the maturity date at which you get back the full value that you invested. The highest quality bonds are very safe with no surprises. Later on, we'll look at CDs, bond funds, and other ways to own bonds that have some differences to be aware of. But next, we'll look at how bonds can provide welcome ballast to stabilize your portfolio in a bad year. Let us know if this is helpful by giving us a thumbs up, and to subscribe to our channel, click here. Thanks for watching.